Imagine a company known for volatility, whose earnings once rode the leaps and dives of global oil markets. That was Petron Corporation in years past. But in 2025, something changed. Petron's net income surged 84% to 15.63 billion pesos. Operating income climbed 28%. Earnings per share nearly quadrupled. Yet, these gains came in a year when revenue actually fell, down 7% to 809.77 billion pesos, as fuel prices softened and export volumes declined. How did Petron outperform in a downturn? The answer lies in disciplined execution. While sales volume slipped, Petron expanded its profitability from every barrel sold. Costs dropped faster than revenue. Gross profit rose 21%. The Petron refinery improved its crude runs, ramping up productivity to 156,400 barrels per day. Domestic sales grew 5%, powered by economic recovery, rising tourism, targeted marketing, and stronger refinery output. Cash flow told its own story. Operating cash flow soared to 68.75 billion pesos, 5 times higher than the previous year. Inventories shrank, and year-end cash climbed 38%. For a sector often strapped for liquidity, Petron finished the year with money in the bank and less strain on its balance sheet. Debt management was a cornerstone of the turnaround. Short-term loans fell by a third. Long-term debt increased, but this shift reduced short-term risk and stabilized financing. Interest expenses dropped 11%, giving Petron more room for profit. Petron did not just focus on numbers. It invested 4.12 billion pesos in capital expenditures, upgrading the refinery, expanding terminals, modernizing service stations, and boosting research. Environmental compliance got attention, with progress on waste reduction and energy efficiency. Confidence showed in shareholder actions, common stock buybacks, dividends, and distributions. Total equity climbed. Return on equity rose to nearly 14%. The company signaled this recovery was more than a fleeting bounce. Of course, the world remains unpredictable. In early 2026, geopolitical upheaval pushed crude prices above $100, reminding Petron and its investors that risk is ever present. But as Petron entered this uncertain phase, the story was different. It had more cash, higher margins, improved momentum at home, and a balance sheet built for resilience. The numbers point to something enduring. Petron, for now, is less a hostage to global oil volatility and more a business in command of its own future.